Have you noticed something lately? Groceries feel expensive. Eating out feels expensive. Rent feels expensive. Insurance feels expensive. Even fast food feels expensive. You walk into the store with $100 and somehow leave with just 2 bags. 5 years ago, that same $100 would have filled your entire cart. Did companies all get greedy at once? Did money suddenly lose its value? Or is there something bigger going on here? Today, we're going to break down exactly why everything feels so expensive right now. And once you understand this, you'll start seeing the economy in a completely new light. Let's start with the most important concept, inflation. Now, inflation sounds complicated, but it's actually very simple. All it means is that prices go up over time. Another way to think about it is that your money buys less than it used to. If a burger cost $5 10 years ago, and today that same burger costs $10, that means the value of each dollar has changed. It now takes more dollars to buy the same thing. So why does this happen? It happens because the amount of money in the economy grows. When there's more money floating around, each individual dollar becomes slightly less powerful. Think of it like a pizza. If you have one pizza and you cut it into 8 big slices, each slice is pretty substantial. But if you cut that same pizza into 20 tiny slices, each slice is much smaller. The pizza didn't change, but the size of the slices did. Money works the same way. When more money enters the system, each dollar just buys a little less. That's inflation. But something unusual happened in the last few years. Prices didn't just go up slowly, they jumped. And there are a few big reasons why. The first reason is money printing. During the pandemic, governments around the world injected trillions of dollars into the economy through stimulus checks, business loans, and unemployment benefits. This was essential to help people survive a really difficult time. But it also meant a massive amount of new money entered the system. And more money chasing the same amount of goods often leads to higher prices. But that was only part of the story. The second reason was huge supply chain problems. Factories shut down, ports were backed up, shipping containers were stuck in all the wrong places. Suddenly, it became much harder and more expensive to move products around the world. So, we had less supply, but the same demand. And when that happens, prices always go up. Then there was another massive factor: energy costs. Energy powers almost everything in our modern world. It powers the trucks that deliver goods, the factories that make them, and the farms that grow our food. So when fuel becomes more expensive, everything that depends on fuel becomes more expensive too. Food prices rise, shipping prices rise, manufacturing costs rise. And there's one more factor that a lot of people overlook. Companies raised prices simply because they could. When customers start expecting inflation, they become more tolerant of higher prices. Many businesses used that moment to reset their pricing to a new, higher level. And as we all know, once prices go up, they rarely come back down. Now, here's the really frustrating part. Prices can rise very, very quickly, but our wages usually move much slower. Why is that? Well, first, companies need to protect their profits. If their costs suddenly rise, they hesitate to raise everyone's salaries immediately. Second, wage increases usually only happen during annual reviews or when you change jobs. Most of us only negotiate our pay once a year, but prices can change every single month. And third, the job market influences wages. If a lot of people are looking for work, companies feel less pressure to raise pay. This all creates a gap. Prices rise faster than our paychecks. And when that gap gets wider, we all feel poorer, even if our salary technically increased. This is why so many people are saying, "I make more money than I ever have before, but it doesn't feel like it." That feeling is real. It's because your purchasing power has gone down. Your income might be higher on paper, but your money buys less. So let's quickly summarize what's happening. Things feel so expensive right now because more money entered the economy. Supply chains got disrupted, energy costs skyrocketed, businesses raised their prices, and our wages haven't fully caught up yet. When all of these forces hit at the same time, the result is exactly what you're re-feeling today. Sticker shock every time you go to pay for something. But there is one more critical thing to understand. Inflation changes how we build wealth. People who only save their money in a bank account often fall behind because the value of their savings gets eaten away. But people who invest in assets like stocks, businesses, or real estate can sometimes benefit because the value of those assets often rises during inflationary times. Understanding inflation isn't just about economics, it's about your personal finances. It changes how you should save, how you invest, and how you plan for your future. So, the next time you walk into the grocery store and feel shocked by the prices, remember this: it's not just you, it's the system. And once you understand the system, you can start learning how to make it work for you, not against you. If you enjoyed this video and want more simple explanations about money, investing, and building wealth, make sure to subscribe. Thanks for watching, and I'll see you in the next one.